Hey everyone, just checking in. We've had a couple people in their client calls and the strategy sessions we've been sending up. They've been asking some of the more refined details of the differences between business credit and business credit lines, credit cards, business loans, etc. So I wanted, while I was on my way to the office, I wanted to check in with you guys and kind of put out the playing field and review some of these. So remember, what we say in our original presentations and everywhere across is know the difference between what is business credit and what is not business credit. Business credit is not anything that reports to your personal credit profile, whether it's a loan, a line of credit, or doesn't matter what it says on the credit card. If it does not have if it reports to your personal profile, it is not business credit, number one. Number two is private loans, hard money loans, private venture. If it doesn't report to your business credit, then it is also not qualified to be truly business credit per se. And what I mean by that is it could be in the business name, but if it is not reporting to your business credit report, then it's not doing you a lot of good. So it's a private venture. It's a private capital. It is private. So those are the two outside bounds. Now, when it comes to true business credit cards that don't report to your personal profile, true business credit lines that don't report to your profile, and business loans that don't report to your personal credit profile, that's what we're going to discuss right now. So a business credit card is just like your personal credit card in the sense that it has a limit. You can charge it up, pay it off, charge it up, pay it off, but it comes with plastic and it has a particular balance or a particular portion of that limit that allows you to do what's called a cash advance. So if it's a Chase card, you can take that Chase business card to Chase and get a cash advance against that. Now, the interest is always higher for cash advances compared to purchases, and you can use that credit card to do your fix and flips, your rehab costs, your anything where you need to use a card for your business. Business credit cards are perfectly situated and perfectly designed for that, and we want to use those for your business instead of your personal, because we don't want to kill the goose that lays the golden egg, which is your personal profile. Now, the difference between a business credit card and a business credit line is that the credit card does not generally have check access, and the lines are generally, this isn't always the case, but generally the credit cards have lower limits, $5,000, $10,000. You can get $20,000 and $50,000 credit, business credit cards, but those credit cards are always higher interest. They're going to be in the 12 to 15% or higher, and they're going to be in, and those credit cards have the utility of being just like a credit card on your personal profile. Now, a business credit line, its main feature is its lower costs, its lower interest rates. The ones we're looking for when you're doing the $1 million funding formula are 3 to 6%. That's prime today, because this video will date itself, but it's prime plus 0.7, prime plus 2 points. Okay, so right now that's between 3 and 6%. So those credit lines are far less expensive, sometimes 3 or 4 times less expensive than even business credit cards. The other main feature is its main utility of being able to write a check. I mean, write $20,000, $30,000, $50,000 of that credit line, but you can write a $50,000 check on a $40,000 check on $100,000. You can write the check, right? So a business credit card will not let, even if it comes with convenience checks, those are typically used as a business credit card convenience checks are an easy and convenient way to get a cash advance, and they will charge you a cash advance. And many times they will charge you usually a 3 to 5% of the amount that you do a cash advance or a check on the credit card. Whereas the ones we vet, the ones we're looking for, we dissuade you from using business lines of credit that are going to use that that are going to have a 2 or 3 or 5% charge for the amount that you use. You write $10,000 check, they're going to charge you $300 to do that on business credit cards, whereas we don't want those kind of credit lines, because we want 0 to 1%, worst case 1%. So those are a couple of the differences between business credit cards and business credit lines. Credit lines, their main feature, low interest and writing checks. Another feature for credit lines is that they require 24 months to qualify. So your qualified funding entity, the business you're trying to get funded, that it has to be a minimum of 24 months old. That is not the case for business credit cards. So those two are both fall under the category of revolving accounts. Okay, business revolving accounts. Now, the business installment loan is different. It's just like a personal installment. It's just like a car, but not secured, preferably. It's just like a student loan on the personal side, but you're getting a loan for your business. It's in your business name, even though you're personally backstopping it. So that is, and a loan has you loan a certain amount. They give you 100% of that amount. So if you have a $10,000 business loan, they give you $10,000 and they transfer that to your checking account, send you a check, whatever it is, but it's a 100%. A credit line and a credit card is a revolving. It allows you to use and pay off, use and pay off, use and pay off. A business loan sends you the entire amount of the loan, and then you make the same monthly payment over a term. Generally speaking, there are no terms on revolving accounts, both credit cards and credit lines, because you get to use it and pay it off, use it and pay it off. A credit card, one other feature on the credit card, a business credit card, is that it does not have a terminus date. And by terminus date, we mean when that particular credit card ends. Whereas credit lines may have you may have to requalify for that credit line every 90 days or 12 months or 3 years, etc. So in your vetting, we've instructed you how to create the longest, and you only want to work with banks that have the longest possible shelf life for that credit line, preferably a minimum of 3 years. Now, when it comes to doing those exact credit lines, you want, let's say you get it for 3 years, well, they're going to have a terminus date. It could be 5 years, 10 years. I've seen them as long as 15 years, where they say, we are going to, whatever the balance is, when it's time, we're going to turn that into an installment loan and close down the usability of it, and we're going to turn it into an installment loan. So, and so that way, let's say you have a 40% or 50% utilization on that, it stops being usable. You can't pay it down and charge it up, pay it down and charge it up. It becomes an installment loan and ends up at you making term payments over the course of usually 2, 3, sometimes 5 years, depending on the size of the credit line. We want the longest possible terminus date on that credit line. So now over on the business loan side, those are installment loans, and those installment loans have a term, all right? And that's that term, 3 years, 5 years, etc. You're going to be making the same monthly payment for that entire amount. We'll talk later about how to optimize those loans, similar to optimizing them on the business side. You get points for their age, you get points for being above 50% balance, all those things, okay? But the purpose of today's tutorial is to make sure business credit cards are not business credit lines, are not business loans. And so go back and review this, take notes, because each one of these have their benefits, and each one of them help you get funding for the others. So having credit cards will help you with credit lines. Having business loans will help you with credit lines. and each one of your funding plans will have, now we, in the $1 Million Funding Formula, to be fair, we focus mostly on business credit cards, the business checking account to help establish the relationship. So that's it for the difference between credit cards, credit lines, and business loans. So if you have any questions, talk to your advisor, and we'll talk to you soon.